The S&P 500 is only 30 points away from all-time highs, which is just incredible to think about. NASDAQ has already set its all-time high recently, so the markets have really held their strength throughout this rally and continued to the upside. And we even saw over here last Wednesday, for example, there was a sharp sell-off in the end of day that ended up being another bear trap. We had a bearish close on the daily. However, the gap up the next day saved it and continued a lot higher until today. We saw some more consolidation. It's likely going to continue from here, although volatility is very low, hence the boring price action we're seeing. A lot of that is due to traders stepping away from their desks for the holiday season, hence the characteristic Santa rally time period of low volume and just a slow grind up, which is exactly what we've seen now within the last couple sessions. But what I really want to talk about in today's video is a couple things that I'm seeing just based on the flow as well as dark pool, because we've seen actually a lot of premium behind not only options order flow prints, but also the dark pool as of recent, like within the last week or so, which is very unusual, especially considering what I just showed you here, the low volatility and low volume of the S&P 500. But basically, if you look over here on the options flow, we had a lot of SPY calls today, unusual calls as well. And the reason why they're unusual, you can see over here, some of these are highlighted in gold since they were above the ask. These have a lot of premium, 1.2 million. That's a lot of premium, 2.1 million, and then 4.9 million. All of these are a lot of premium. Anything over $1 million, especially when you see repeat orders, a characteristic sign of a lot of premium. Now, another thing, these were above the ask because they were in gold and also were at the money. So it's not like these were super deep in the money or anything. Also isn't like they're super far out the money, but they're at the money with a lot of premium behind them and also a very short-term expiration. So we're looking at only a couple weeks until these expire. These are bullish prints and they're betting on a relatively short-term move to the upside with, again, a lot of premium to back it. So these are bullish prints. It's not typical that we see calls like this for the S&P 500. So these are definitely orders you're going to want to watch. They added it about 475 mid on the S&P 500, which I'll go over to that chart here in a second, right after I show you the next thing that I want to talk about, dark pool prints. This was insane today. We had 5.3 billion worth of dark pool prints at the 475.55 level. Now, the first thing that I want to mention with this is structure-wise. If we go back, for example, go to the hourly on the S&P 500 here, and we go back a little bit. Obviously, it looks very overextended at the moment. It's a huge rally from that October 27th low, which is a lot further back. But even in the short term, if we're looking within the last month or so, it's been a continuous grind up. We had a large gap up, for example, back here, November 14th, followed by upside, even some consolidation, but then a breakout of that consolidation as well. Really, it's just been consistently to the upside day after day. And even with the day that we had down over here, it just picked up soon after that. So the first thing that brings me to think about is it's actually very unlikely that these would be buy orders. Institutions like to load up shares via the dark pool, whether it just be within a consolidation / accumulation phase or near lows when we're near oversold levels, kind of like they did before this large rally began at the end of October. So in this case, the fact that we're this high up at 475.55, at least for SPY, which I'll just go over to SPY's chart really quick here to show you, the fact that we're this high up right now is super unlikely that they are loading shares and accumulating shares for a lot more upside afterwards. Now, that doesn't mean that we have to sell off from these levels up here. However, that does provide us with a sign that there's potential top forming around this range. This is not something I'm going to short just yet. I have an idea of when I'm going to short next, which, by the way, I haven't shorted since early October. I even had a rule, if you remember, from back when those videos were made, that I wouldn't short until February, and that is still standing true to right now. Possibly I'll short around the end of January. There's a window there where we could see a pullback. However, at the moment, at least in the short term, we're still looking at some more upside. We have the order flow like I just showed you, those calls to support it. We have technicals to support it. The fact that we had this bear trap over here, a very sharp downward move that was followed by a gap up, and that gap never filled. And we continue to the upside. This is a bear trap, and also potential breakout of this consolidation zone here between 468 to 475-ish. Was a bit of consolidation over the course of a couple sessions. Now we're attempting to break out above it. That also is a bullish development. So in the short term, it still looks bullish. However, something like this, when we see a 5.3 billion print, which is a pretty hefty print, this just shows us that macro-wise, we have to start watching for those signals of a potential pullback, since it could come within the next 2 or 3 weeks. So this is definitely something that is eye-catching. A lot of premium, super unusual to see over a 5 billion print. And also, not only today did we see a large print, you could actually go back to the previous, I guess, one day, since Christmas was on Monday. But if you look over here at the previous day, we had 2 billion at that 475.51 level, as well as the 2.9 billion at 473.51. So there is quite a bit of premium, around 3 billion from yesterday, and then of course this 2 billion plus the 5.3 billion. We're looking at quite a bit of premium, over 10 billion within 2 days, which is fairly unusual to see. So macro-wise, it looks like, I would assume that this is a sign of distribution. Again, it doesn't have to manifest itself in price immediately after, because again, short term, it still looks like there's some more upside to go. But this is definitely something you want to watch for. Continue to watch the videos in the future, since this is a developing process that can give us insight on when potential pullback can occur. So that's one thing I do want to mention on the S&P 500. Still, short term wise, seems like it's bullish at the moment. Another thing I want to show you that is bullish at the moment is Tesla. And I've shared this multiple times now in the past. We had a key downward trend / supply zone breakout. So this blue trend line here was a downward trend breakout, and I'll show you where I got it from. If you look on the hourly here, this is a key downward trend that goes all the way back to the high that was made in July. So right around the time that equities made that high before we saw the pullback / correction in the indexes in the fall. But basically from that high, or around that high over there, we had 2 attempts to break out, was unable to, as well as another attempt over here, this 3rd time to break out. It finally broke out recently back here in the middle of December, and not only did it break out above the blue trend line, but also this key supply zone that contained price throughout all of this consolidation. We saw Tesla consolidate for about 5 weeks straight, which is super unusual for Tesla of all tickers, since this typically is volatile. But it consolidated here for about 5 weeks, and then we broke out over here above that as well. So a convergence of 2 key resistances that we're able to break out above. That is very bullish. We saw some consolidation after the breakout, and now we had an additional breakout of that consolidation, which is right above 258.90, 259-ish. This level, we broke out above it today during today's session, and we had a daily close above. That is very bullish. So the fact that we broke above this downward trend line / supply zone convergence, important one, especially in the macro wise, we're able to hold above it for 2 weekly candles. That's another thing, and consolidate in this range and then break out of the consolidation is very bullish. This is typically a precursor to a large continuation rally, likely to go to the mid 270s actually, assuming that the S&P 500 stays propped up, which again, short term wise seems like is going to be the case. But at the moment, this is very bullish. The fact we broke above yet again this consolidation zone here, and going forward, as long as it can stay above where we open today, it's very likely we see excess continuation to the upside. This is likely going to be one of the more bullish big cap tickers heading into the month of January. So I really like this one. At the moment, I've been talking about it now for a couple weeks since this is very bullish, and it was bullish even during this consolidation. Regardless, looks like it'll be a fun year ahead, especially in the indexes such as the S&P 500, considering that we're coming off such a tremendous rally to the upside. The fact that the end of October all the way to now, end of December, only about 2 months, we were able to get from the low 400s now to about 470 mid is pretty absurd. And the fact that it still looks bullish, at least in the short term, is also incredible as well. So we'll continue to watch it, because again, there will definitely be a pullback opportunity, especially when we're seeing distribution via the dark pools. That's a sign of profit taking from institutions, which eventually, like I said earlier in the video, will manifest itself in price in the form of a pullback. Now, will the pullback be large? Very unlikely it is a large one, especially as long as we stay above this trend line here, key downward trend that goes all the way back to the all-time high that was set back in January of 2022. As long as we maintain above this, the uptrend, at least in the macro sense, will remain intact and will continue higher. But as for the short term, again, seems bullish right now. And there can be that end of January / early February pullback opportunity, which I will hop back into a short position. It's been a while, but I plan on hopping back into a short position around that time. But at the moment, I only plan on taking short-term tactical long setups on the S&P 500. And other than that, as always, appreciate you guys watching this video, and I'll see you next time.